Good evening. My name is David Hutton and I'm the Chairperson of the Australian Catholic Superannuation and Retirement Fund. On behalf of the Board, executives and staff of Australian Catholic Superannuation, I'd like to welcome you to the Fund's annual member meeting for the 2021 financial year. Our auditor from KPMG is also with us this evening. We're pleased you've joined us and we hope that you and your families are well in what can only be described as another very challenging year. Due to the uncertainty involved with the pandemic regarding border closures at the time of planning, we have again decided to conduct the meeting virtually. This event is an opportunity for you to hear from the Fund's leadership team on the Fund's performance and operations and to ask questions of them. To ensure the meeting runs smoothly for everyone, we've muted your microphones. If you have any questions, you're welcome to submit them via the chat window on your screens, and we'll answer them during the Q&A session of today's meeting. If we run out of time to answer all questions raised, we'll include our response to your questions in the minutes, which we'll publish on our website within the next 30 days. I'll start the meeting with a prayer. God of all peoples, you inspire us by the courage of our pioneers and enrich us by the ancient wisdom of the Indigenous people who first inhabited this land. Through the intercession of Mary of the Southern Cross, may all who live within our shores be gathered together to form one people. We pray especially at this time for all who are affected directly or indirectly by the current pandemic. We ask this through Christ our Lord. Amen. We would also like to acknowledge the traditional custodians of the land on which this meeting is being held and recognise their continuing connection to land, water and community. We pay respect to elders past, present and emerging. Today you'll hear from our Chief Executive Officer Greg Cantor, our Chief Investment Officer Michael Block and me about the Fund's operations and highlights, how your investments have performed over the past financial year and the future plans for the Fund. The past financial year has been a difficult one for our nation due to COVID, as Australians experienced lockdowns across the country, which had a significant impact on the economy and many industries as a result. That said, the Fund's investment performance has seen some strong results for the 12 months to the 30th of June 2021. Lifetime One returned 20.9% return for our 40 years and under members, 17.4% return for our 50-year-old members, 13.9% return for our 60-year-old members, and 9.4% return for our 70-year-old and older members. It is disappointing that the Fund did not pass the inaugural Your Future, Your Super performance test. As the test was retrospective in nature, looking back 7 years, it combined the performance of the previous MySuper default, conservative balanced, with the current default, Lifetime One, to determine the result. It is pleasing to note that the Lifetime One performance has improved over the past 2 years. The Fund continues to hold the highest rating available from Chant West, an independent rating agency, and won the Chant West Insurance Best Fund Award in 2021. During the financial year, we implemented a number of initiatives that were part of industry-wide changes. The Fund has developed and published its target market determinations for its super and pension products. This is to assist new and existing members to choose the appropriate product by considering the design and appropriateness of the financial products for them. The Fund has implemented processes to manage the numerous legal reforms that came out of the Hayne Royal Commission. This includes new requirements around hawking practices, complaints handling, breach reporting, and advice-related practices. Towards the end of 2021, the Fund has been managing aspects of the Your Future, Your Super reforms, including new stapling requirements, as well as the annual performance test. As you're aware, Australian Catholic Superannuation has always maintained a strategy to seek increased scale, that is, to grow our membership and our funds under management. This is to ensure we can continue to act in our members' best financial interests. After a robust selection process run by independent consultants PricewaterhouseCoopers, Australian Catholic Superannuation is now proceeding with the merger with UniSuper to create during 2022 one of Australia's largest super funds. UniSuper, which is the Super Ratings Fund of the Year in 2021, ranked first on both administration fees and investment performance, two critical criteria in our selection process. UniSuper provides a strong member and employer service model and advice service, very similar to the ACS model. UniSuper is the super fund of choice for both Catholic universities and undertakes to maintain the close connection we have with our Catholic employers. UniSuper's focus and experience in the education sector was a major factor in this decision, as their focus on a small group of principal employers is well aligned to the ACS model. The merger will create a $116 billion superannuation fund with approximately 550,000 members servicing the education and community services sectors across Australia. Importantly, the merged entity will continue to be a profit-to-member fund run to benefit you, our members. Australian Catholic Superannuation has valued its strong connections to the Catholic Church for 40 years, and UniSuper has been the fund of choice for both Catholic universities in Australia for many years, and also values its long association with these Catholic organisations. The merging of the funds will ensure the future security and sustainability of benefits to the members of Australian Catholic Superannuation. In conclusion, I thank my fellow directors, the management and staff of the fund for all their efforts in ensuring we continue to look after our members' best interests during a challenging year. The board, management and staff thank you, our members, for your continued support. I'll now hand over this meeting to our Chief Executive Officer, Greg Cantor, who will share several highlights about the fund during the past financial year.
Thanks, David. Good evening, everyone. It has been an extraordinary year with lockdowns in many parts of Australia affecting many of our members and their families. I want to remind you that our staff are here to help you with your superannuation and retirement planning needs. We have a dedicated, locally based, award-winning call centre focused on assisting you. You will also find the answer to many of your questions on our website. Similar to many organisations, the past year has been a challenging one for the fund. However, there has also been many positives, which I'm proud to share with you tonight. Despite a challenging year with the ongoing impact of COVID-19, throughout the year, investment returns have met their objectives as outlined in the Superannuation Product Disclosure Statement and our annual report. Our default product, Lifetime One, gradually reduces exposure to growth assets for members between the ages of 41 and 70. For members 40 and under, returns for the year to June 2021 have been over 20%. Michael Block, our Chief Investment Officer, will cover the fund's performance in more detail in the next session of this meeting. We were pleased to announce a reduction of our asset-based administration fee and investment management fees on 1 July 21. Additionally, the fund announced a further reduction in our investment fees and our indirect cost ratios from the 12th of October 2021. It's never been easier to check your super on the go. Our new mobile app makes checking your super simple. The app can assist you with checking your balance, understanding how you are invested, and a range of other features. Please download it at the app stores. Our fund continues to record exceptionally high levels of member satisfaction, being voted the 6th best superannuation fund in the country for most satisfied members in the Investment Trends May 21 Super Engagement Report, an independent marketing and research company for the financial services industry. In the survey, Australian Catholic Super outperforms the industry average across all 24 service areas measured. It rates the fund amongst the industry's best for communications, annual member meeting, and the range of investment and pension options. Members' overall satisfaction with Australian Catholic Super has continued to increase in 2021. One of the things that sets us apart from most superannuation funds is our self-administration system, which includes an in-house call centre team which only services our fund's members. This means that each member who calls us can receive focused, personalised services from our Australian domiciled member services team. During the financial year, our member services team attended to just on 55,000 calls, and they responded to over 18,000 emails from members to the end of June 2021. As David mentioned earlier, the fund continues to hold the highest rating available from Cantor, who are an independent rating agency. I'm pleased to announce the fund has once again won an Australian Business Award for being an employer of choice in 2021. In addition, the fund's call centre was awarded the Service Champion in the Service Excellence in a Medium Contact Centre category in 2021. And once again, two of our financial advice staff won their respective categories in the IFS Awards for 2021. I am proud that we have an engaged, dedicated and happy employees, because this means that they will continue to deliver even better outcomes for our members, despite the extraordinary times we are experiencing. I thank the board, our executive and staff for their efforts over what has been a most challenging year. As our board chair stated in his address, we have a major focus on achieving the merger with UniSuper by the end of 2022. As CEO, I look forward to undertaking this major task that will enhance our members' outcomes for you. I would also like to thank you for your continued loyalty to our fund and want to assure you that the transition to UniSuper will be as seamless as possible. I encourage you to stay up to date with the latest developments about your super and the fund via our website and social media channels. I'll now hand you over to our Chief Investment Officer, Michael Block, who will provide an overview of how the fund managed your investments over the last financial year. Thank you.
Thanks, Greg, and good evening, everyone. Despite our optimism last year that COVID could be contained and that lockdowns would end as vaccination rates rose, we were still very surprised by the strength of investment returns. Investment returns to 30 June 2021 were amongst the highest return in the fund's long history. For example, our shares option returned 28.4% for the year, and our growth stage within lifetime run returned 20.9%. Despite all markets, including shares, bonds and property, remaining at historically high levels, we continue to be cautiously optimistic about the future and managing your retirement savings accordingly. Our fund has 14 investment options to suit our members' differing objectives, risk tolerances and investment timeframes. For members in our default Lifetime 1 option, their super is automatically invested in safer assets as they approach retirement, therefore reducing their exposure to risk. So, not only did our default My Super option protect our older members during COVID, but it has also delivered excellent returns over the past year, well ahead of the fund's published objectives. During the financial year 2020 to 2021, Lifetime 1 delivered a 17.4% return for our 50-year-old members, a 13.9% return for our 60-year-old members, a 9.4% return for our 70-year-old and older members, and for our younger members, those 40 years old and younger, Lifetime Start returned 20.9%. Our conservative balanced option, which used to be our default super option and is our most popular option amongst members who have selected an investment option, delivered a return of 13.8% for the financial year. It also retained its competitive returns of 6.7% for the 10 years to 30 June 2021, a result that sees our conservative balanced option above the average performance of similar options in the industry during every period over the past 10 years. Each week, our investment team reviews the fund's investment portfolios to help members maximise the returns against the risks of their investments. This review also ensures that the team align its decisions with the fund's long-term investment strategy and the advice from our asset consultants. In March-April 2020, and also at the start of the financial year, the fund increased its exposure to equities as share prices had fallen as a result of the pandemic and now offered better value. After a sudden 34% fall in the US stock market, a number of quality shares were sufficiently discounted, which enabled the fund to increase its holdings in equities at the end of March 2020. With interest rates reaching historic lows during the financial year, the ability for bonds to make a real return after inflation, or perform as they have in the past, has diminished. The fund reduced its exposure to bonds, preferring corporate debt with higher expected returns. Additionally, to help maximise returns, we've invested in smaller, more profitable companies valued at less than $2.6 billion. As a smaller super fund, we've been able to use our size to advantage by utilising strategies not available to larger funds due to their limited capacity. Such strategies include smaller companies, hybrids, and emerging market and private debt. We also continue to increase our environmental, social, and governance (ESG) footprint, as this is becoming a more important matter with members and the community. As part of our journey to implement responsible investment practices, we collaborate with like-minded organisations, such as the Australian Council of Superannuation Investors, which collectively represents 33 Australian investors, to strengthen corporate engagement on ESG issues. The United Nations supported Principle of Responsible Investing, PRI, a global body that promotes responsible investment, and also the Investor Group on Climate Change, the IGCC, a collaboration of the region's investors focusing on the impact that climate change has on the financial value of investments. We also offer a socially responsible investment option, which debuted in 2002. This option did well, outperforming our diversified strategies and delivering a strong positive return of 17% for the year to June 2021 and over 8% per annum for the 10 years to June 2021. In fact, our responsible investment option is one of our best performing options, showing that you can do well by doing good. This option is currently managed by Australian Ethical, one of Australia's leading ethical fund managers. Despite shares and growth assets being historically expensive, we have a positive outlook for shares, credit and infrastructure, and we continue to diversify the portfolio and add to our investments in these asset classes. Thank you.
Thank you, Michael and Greg, for your updates. That brings us to the question and answer section of the annual member meeting. This is your opportunity to ask questions about all areas of the fund's performance and operations. We provided you with the opportunity to submit any questions as part of the registration process and throughout the meeting today via the chat functionality. We'll aim to answer all of your questions today. However, if time does not permit us to answer everything, we will respond to all appropriate questions in the minutes of the meeting within 1 month, and these will be placed on the fund's website in addition to a full recording of today's meeting. Due to the pandemic, I'm currently streaming into the meeting from Brisbane. Whilst thanks to technology, it appears as though I'm sitting in Sydney with Greg and Michael. As such, I will now hand to the Chief Executive Officer, Greg Cantor, who is in Sydney to host the question and answer session. At the conclusion of the question and answer session, Greg will then hand back to me to close the meeting.
Thank you, David. The first question we have, and David to answer, have come multiple. Samir, Terry, Michael, Archibald and Rosemary have asked similar questions in relation to the recently introduced YFYS performance test. Why did you fail the APRA performance test and who is responsible?
Thanks, Greg. I'll answer that one. We employed a strategy to meet our investment objectives. However, the recently introduced APRA benchmark used in the YFYS test were different from our strategy. Also, our shares portfolio did not perform as well as the statutory benchmark. Both factors contributed to the fund not passing the performance test. We were only notified of the benchmarks to be used in the YFYS performance test in August of last year. However, it applies to performance going back 7 years to 2014. We have since aligned how we invest your money to this new benchmark. Ultimately, the Trustee Board is responsible for all aspects of the fund's operations.
Question 2. Samir has asked, is your eagerness to merge with another super fund related to the APRA performance test failure?
Thanks, Samir. Australian Catholic Superannuation has always maintained a strategy for scale. By this we mean growing our membership and our funds under management to provide improved benefits to our members and to continue to act in our members' best financial interests, and also to adapt to the rapidly changing superannuation landscape. This strategy was in place well before the introduction of the YFYS performance test.
Question 3. Samir has again asked the question, what will APRA do if you fail the APRA performance test in 2022?
If
David?
the fund fails the APRA performance test again, then the fund can continue to operate, but it cannot accept new members into our MySuper option.
Question 4. Ian has asked, what were the factors which caused the amalgamation with NGS to fail? And a follow-on question, what are the critical factors which need to be met for the Uni Super deal to succeed? David?
Thanks, Ian. NGS Super called off the merger with Australian Catholic Superannuation because they did not believe the merger would be in their members' best financial interests. And in response to your second question, both funds, ourselves and Uni Super, need to be able to demonstrate that the merger will be in our members' best financial interests. A process of detailed due diligence is currently being undertaken by both funds to determine this.
Question 5. Anne has asked, can you confirm that a lasting beneficiaries nomination is an option for members? If not, when? Thanks, Anne. The fund does not offer non-lapsing binding beneficiaries to protect the risk of member circumstances changing. However, we have recently introduced a new form for members to reconfirm existing binding beneficiaries after the expiry without the requirement of witnesses. The form is available on our website and is called Confirmation of Existing Binding Beneficiaries. Mary has asked, will there be an update on merger proposals with Uni Super? David?
Thanks, Mary. I did make some comments in my opening response about Uni Super. And as we've just mentioned, we're currently in a detailed due diligence phase with Uni Super, and we will provide regular updates to all our stakeholders throughout 2022 as that unfolds.
Susan and Elizabeth have asked, is the work test for a lump sum contribution to super for retirees under the age of 75 still to be abolished by the 30th of June 22? And is there a possibility that could happen earlier? The work test remains the same for this current financial year, but only last Thursday, legislation was passed in both houses of the Federal Parliament, which included that from 1 July 22, the work test will be removed for non-concessional contributions for people between the ages of 67 and 74. We recommend that you speak to one of our limited advice team for consideration of your individual circumstances. Question 8. Rosemarie has asked, what steps or changes have been effected to ensure that this never happens again? Michael.
Thanks, Rosemarie. I'm assuming that your question is in relation to the YFYS performance test. In order that we reduce the chance of this happening in the future, we have realigned our investment strategy so that it more closely performs to the requirements of the YFYS test.
Patricia has asked, I note that ACSRF are looking to merge with another company. Is this because the merger was unsuccessful with the first company? David.
Thanks, Patricia. As I mentioned earlier, Australian Catholic Superannuation has always maintained its strategy to grow for scale. By this we mean increasing our membership and our funds under management to provide improved benefits to our members and continue to act in their best financial interests and to adapt to the rapidly changing superannuation landscape. The failure to merge with NCS has not changed our objective in this regard, and we're excited at the prospect now of merging with UniSuper.
Question 10. Patricia has also asked, I would also like to know what changes you propose to make to the superannuation, given I am looking at transitioning into retirement within the next 2 years. Thank you. David.
Our main focus in the coming year will be to complete the merger with UniSuper. As we said earlier, one of the biggest and best performing funds in the country, and that's to ensure we continue to operate in our members' best interests. In relation to your own personal situation, it will be important that you speak with one of our limited financial advisors at no additional cost, who will be able to analyse your situation and advise you accordingly as you move into retirement.
Henry has asked, when the merger with UniSuper is achieved, can we expect the admin fees on Retire Smart accounts to change for the benefit of members? David.
Thanks, Henry. While it's early in the merger process with UniSuper, should the merger proceed, then the expectation will be that our members will experience lower fees, as UniSuper have industry-leading low fees. This was one of the major reasons for the selection of UniSuper, in addition to their excellent investment performance.
James has asked, why does it take 4 days to transfer regular fortnightly pensions from the pension account to our bank account? E.g., the 10th of December 21 was a regular redemption and the 14th of the 12th received in bank account. Thanks, James. We often run pension payments prior to the date they are due to ensure the payment reaches our members' bank account on time, if not the day before it's due. We do this for the following reasons. Pension payments are paid on a forward and not historical unit price basis. This means that once the pension payment has been processed from your account, we must wait for the next day's unit price, which is received after 4 p.m. New South Wales time. Once the unit price is received, on the following day the pension payments are transferred to the members' bank accounts. Please contact our call centre for further assistance in relation to the pension payments, where a subject matter expert can assist you further with your own personal circumstances. Hugh has asked a rather long question, but Michael will take it up. The business section of the Australian newspaper reported on the 17th of December that a number of big-name super funds were shown to have failed the Financial Watchdog's performance test in August 21. One of those mentions was our fund and Lifetime One. Australian Catholic Super's performance is mentioned again in the Australian article on the 17th of December, referring to the latest APRA review released on the 16th of the 12th as failing the performance test. Could you comment on the accuracy or otherwise of these reports, please?
Thanks, Hugh. We can confirm that Australian Catholic Superannuation did not pass the inaugural APRA performance test in relation to its MySuper default option. To clarify, this was in relation to just this one option and not the fund more broadly, and all members in this investment option have been notified of this.
Daryl has asked, what is the fund doing about reducing exposures to fossil fuel investments? Michael?
Thanks very much, Daryl. This is a very topical question at the moment. The fund is currently exploring and instigating a range of different initiatives around environmental, social and corporate governance, ESG. Our socially responsible investment option, which was introduced 20 years ago in July 2002, which we currently outsource investment management to Australian Ethical, provides an investment option for those members who wish to make a stronger statement on ESG strategies and have no fossil fuels in their portfolio. We have also appointed Institutional Shareholder Services, ISS, to engage with our investee companies to understand the most effective way to exercise our proxy votes. This would encompass how the vote votes on all issues. The fund also continues to reduce exposure to fossil fuels by investing in ESG strategies and renewable energy. A few examples of this include our investment in the Australian Renewable Infrastructure Fund and our appointment of Robeco to managing emerging market equities with an ESG focus.
Darren has asked, why was MySuper able to go from a consistently high-performing fund to one of the worst in such a short time? Michael.
Thanks, Darren. The fund has achieved its published investment objectives and has provided members with strong positive long-term performance, an average of 8.9% since the fund's inception. The APRA performance test is new and was introduced in mid-2021. It is but one of a number of ways of assessing investment performance. For example, the fund historically uses super ratings to measure its investment performance. In comparisons with other super funds, according to super ratings surveys, the majority of the fund's assets achieved above median performance. The fund, though, does recognise the underperformance against the statutory YFYS performance test. We have chosen UniSuper as our merger partner, an industry-leading, low-cost, top-performing fund in the education centre, to continue to meet our members' best interests.
Alexa has asked, what is the Australian Catholic Superannuation and Retirement Fund doing to ensure the MySuper option, Lifetime 1 from May 2018, passes the Australian Government's performance test?
Thanks very much, Alexa. As Chairperson David mentioned previously, we have realigned our investment strategy so that it more closely performs to the requirements of the YFYS test. The performance of Lifetime 1 has improved over the past 2 years, especially for members in the older cohort. The next YFYS test will cover 8 years of investment performance and will include the 7 years of performance data that was used to assess us to 30 June 2021. Therefore, it is likely that the product will not pass the test this year, even if we outperform the benchmark for this financial year.
Julie has asked, I'm considering switching funds as ACSRF has been identified as an underperforming fund. Apart from a reduction in fees, what else has been done to improve the benefit of members? Thanks, Julie. Australian Catholic Superannuation continues to focus on meeting the best financial interests of our members. The fund's recent achievements include winner of the Chant West Insurance Best Fund Award in 2021, who are an independent rating agency. The fund has once again won an Australian Business Award for being an employer of choice in 2021. The National Customer Service Body, CSIA, awarded the fund's call centre Service Champion in the Service Excellence in the Medium Contact Centre category in 2021. If you're considering switching funds, we recommend that you consider your insurance arrangements in that fund and check whether you can replace the type and level of cover in another fund. Speaking to our award-winning financial service team, as one of our limited advice team, will be able to assist you with many of these areas where at no additional cost. Michael has asked, has this assessment resulted in account holders exiting ACS for other super funds? What percentage has left? And how has this affected the current value of the fund? Thanks, Michael. Some members have exercised their choice to transfer to another superannuation fund. However, our funds under management as at the end of January 2022 remains at over $10 billion and with over 80,000 members. Members do not provide the reason for exiting the fund, and as such we are unable to provide the percentage of exits attributed to the YF-YS performance test results. Christine has asked, can you tell me what are the main holdings held by ACSRF and the investment managers the fund uses? Michael?
Thanks very much, Christine. Australian Catholic Superannuation invests in a range of different shares across many industries, markets and countries. If you refer to the fund's annual report, which can be found on the fund's website, you can see further information about our portfolios and managers.
Thomas has asked, why don't you invest all of the fund's international equities in tech stocks?
Thanks very much, Thomas, and another very topical question given the recent volatility in tech stocks like Facebook. We seek to grow our members' retirement savings as safely as possible, and in order to do that, we use risk-controlled, diversified portfolios. We believe that investing too much in a very small number of stocks carries too high a concentration of risk.
Wayne has asked, what is your current position with investment markets? Michael?
Thanks, Wayne. We are currently cautiously optimistic about the future and have a positive outlook for equities. We are also concerned with the low return from bonds and have reduced our exposure to government bonds in favour of strategies such as private credit, emerging market debt and hybrids, which offer historically better returns.
Natalie has asked, I have an account with both Australian Catholic Superannuation and UniSuper. What will happen to my insurance? Thanks, Natalie, for your question. As part of the detailed due diligence, we'll be considering members who have accounts with both funds in detail, as we'll ensure our members are not disadvantaged and retain the same benefits. Ray has asked, do I need to transfer to UniSuper? Thanks for the question, Ray. No, you do not need to do anything. If the merger proceeds, we will automatically transfer your benefits to UniSuper. If you do plan on transferring to UniSuper before the merger is finalised, we strongly recommend that you speak to one of our financial advisors, as there are potential financial implications in relation to insurance. Rita has asked, I receive advice from ACSRF and will this continue with UniSuper? Thanks, Rita, for your question. We are in the early stages of the merger process and understand that many thousands of our members have previously received advice. UniSuper also offers an advice service, so this service will continue for our members. We will keep you informed throughout the process and continue to share any new developments and important information as it comes to hand. Question 25. As we are running out of time, this will be the final question this evening. Bill has asked, does the merger impact the fund's history and relationship with the church? David?
Thanks, Bill. Australian Catholic Super and Uni Super have much in common. Similar values, similar mission of putting members first, high levels of service through self-administration, and both currently servicing Catholic universities, that's ACU and Notre Dame, as Uni Super is their default. Uni Super has given its commitment that the servicing of ACS members and employers will continue at the current high standards post-merger. Well, that brings us to the close of our annual member meeting this year. I'd like to firstly thank our loyal members, for your attendance, questions, and overall contribution to the continued success of the fund. I'd also like to thank my fellow directors, our executive, management and staff for making today a success. I take this opportunity to remind you that much of the information we have provided tonight, as well as many of the answers to your questions, can be found on the fund's website at www.catholicsuper.com.au or our social media channels and various fund publications. I encourage you to utilise these resources throughout the year and also to contact the fund with any questions you have from time to time. I hope you found the meeting informative and reinforced your confidence in Australian Catholic Superannuation and how we're managing your money to ensure your retirement savings are maximised. Thank you and good night.